Okay. So again, just know the FASB are the ones that develop accounting principles, and those are generally accepted accounting principles. So know that. Then also, I would know the difference between internal versus external users of information. So what's an internal user of financial information, or who is an internal user?
Managers and employees.
Very good. Yeah, the people within the company, internal. So managers, employees, CEO, CFO, you know, just people within the company, internal auditors. What about external?
Investors.
Very good. Investors.
Government.
The government, they want our money.
Your banks.
The banks, yeah, like lenders, so any kind of bank or financial institution. Those are our big ones, right?
Would third-party CPAs be a part of that?
They can be, because they're external auditors, right? So you would see that they could be a user of, they're an external user of financial data. Now, a lot of times we use them internally to audit, but it's still, yeah, you could consider that.
Okay.
Yeah, so those are our big ones. The government for taxation. We have investors wanting to invest in our company, and then lenders if we want to borrow money. And then the only other one we really look at maybe would be customers. You know, sometimes they're interested in our financial data, especially if you're looking at maybe buying a car, you know, it comes with a warranty or, you know, service or something. Is this company going to be around to fix my vehicle or provide those free oil changes for life or whatever the situation is? So that can be important too. So those are users of financial information. Let's see. Trying to kind of go in order here as much as possible. And we did talk about some assumptions and principles. So I would know what the business entity assumption is. Business entity assumption. So know the business entity assumption. Does anyone remember what that might say?
Is it that what they put on their financial statements is directly related to the business? It's not the person.
Yeah, that's exactly it. Very good. The business itself should be kept separate from personal financial records. So this is really important when we're talking about like sole proprietor or partnership, but even still, even in a corporation, I can't go spend company money on my own personal, I can't buy a car with company money. Yeah, I have to keep those financial transactions separate. Because otherwise it is skewing our financial data, right? Because if we include our own personal expenses in the business, our profits are going to look much lower than they truly are because we're buying houses and boats with company money. So, but that could be for any form of structure, of business structure. So yeah, with business entity assumption, we're assuming that the records, the financial records provided by the company are for the company only. So the profits and the expenses, everything are for the business. Very good. Let's see. Of course, what is our financial or our accounting equation, our basic accounting equation? Very good. Yeah. So assets equal liabilities plus stockholders' equity. So we know every time we have business transactions that accounting equation needs to stay in balance. So assets should always equal liabilities plus stockholders' equity. So with that, you know, you need to know that, and then you need to kind of know the different categories or the different account types. So again, what are some examples of assets? Cash, very good.
Accounts receivable.
Perfect, accounts receivable. And again, accounts receivable, what is accounts receivable?
You might be paying credit. You're paying a credit card or
Jobs that you completed and received funds for. bulk job
Yes.
completed, but you're gonna receive funds for it.
Yes, exactly. It's when we perform services or provide goods on credit to our customers. So it's our customers owing us money. Okay. Yeah, so accounts receivable is an asset. It's when our customers owe us money. Okay. So we're billing them for services provided. Okay. Easily confused with accounts payable. It's an easy one to get mixed up. But again, when you see the word receive, we're receiving money. Okay, so you might make a note of that because it does get tricky. What are some other assets? Land, good. Any others we can think of? Supplies, perfect. Anything else? Equipment. Equipment's an asset to us. Those are probably the main ones we've dealt with so far, right? Cash, accounts receivable, supplies, land, equipment. I think if there are any I'm missing there.
Does equipment not fall underneath supplies?
No, supplies are going to be like everyday, like paper and pencils and things like that. Things we'll use up within a year, basically. Equipment is going to be maybe like computers or factory equipment when we get into manufacturing that we'll use long term in the business. Or it could be like a delivery vehicle, or, things of that nature. So, yeah, good question. Okay, so that's a lot of assets. Again, assets are just things of value, right, that we own in the business that help us earn revenue. How about a liability? What's the account we've been using for liability? Accounts payable. Okay. So far, that's really the only liability account that we've used. And what is accounts payable?
Two debts.
It's our debt, right? It's when we owe money. Very good. Okay. So liability is a debt we owe. So it's something we have to pay. Okay. And then we have stockholders' equity. Okay, stockholders' equity, you could also look at it as like the net worth of the company, right? It's like the rights the stockholders have to the business. So it's what's left over. If we took everything, all of our assets, and paid off all of our liabilities, what's left over is the actual equity of the company, kind of the value of the company. So there's 4 different accounts that affect stockholders' equity. So what type of accounts affect equity? Common stock, good. Does it increase or decrease equity?
Increase.
Increase, good. So common stock is when we have people purchasing stock in our company or buying ownership. So they give us cash and we give them partial ownership of our company. What's another one? Dividends? Yeah, good. Do they increase or decrease equity?
Decrease.
Decrease, good. So dividends get taken out of equity. And what are dividends?
What we pay our investors or whatever.
Yeah. Like whatever. Yeah, exactly. It's just when we pay out like a share of our profit to our stockholders. So again, they're not required, but if we have a good profitable year, we might want to share some of that profit with our stockholders. And we'll learn more about that in financial accounting, but that's really what you need to know about dividends. Since we're paying them out to our stockholders, it's decreasing our equity and our cash. But it's a good faith thing for, to keep stockholders. If we pay them we share some of our profit, it might keep them investing or make them invest more. So it's a good strategy sometimes. What are other accounts that affect equity?
Expenses.
Expenses, good. And do they increase or decrease?
Decrease.
Decrease. And what are some examples of expenses? Heard rent, supplies expense, salary, good. Utilities, could be some type of subscription that we subscribe to. So these are everyday, like monthly type expenses. Okay, so these are things we're writing checks for. We're paying cash. Okay, so it's just money that's helping us. Again, we need employees to run our business, so we need to pay those wage expenses to help us earn revenue. Okay. So yeah, rent, utilities, wages, supplies, things that help us. And what's the last one that affects equity? Yeah, fees earned or revenues, right? Yeah, you're on the right track. So revenues, that's just the money we receive for performing services. So if we provide consulting services, they give us money or we bill them. Either way, we're earning revenue. And then remember, with both revenues and expenses, we record those like revenues the day we earn the revenue. Even if we're billing the client and they're going to pay us later, we're going to go ahead and record that transaction the day we perform the service. And then same with expenses. We can pay expenses, you know, say using a credit card or something like that. But we're going to journalize, we'll get into that next chapter, which technically next month too. The last day of January. That worked out for me. Next chapter. But we are going to log or record expenses when we incur the expense, whether we pay it today or next month or anything like that. Okay, so that's a big part of it, being able to understand the different accounts, you know, which one, if they're an asset, a liability, or an equity. So, you know, review that, be able to tell me that. And then also know how to do the statements, okay? So also, I guess while we're still on this, be able to, you know, identify transactions. So like we did on the practice and you did in the homework, if I say, you know, Jane started a company and she invested $500,000 cash in exchange for stock, be able to tell me, you know, cash is an asset, it's increasing. Stock is an equity account and it's increasing. You know, remember we did that a lot in the practice and the homework. Yes, sir.
Revenues is increasing, right?
Yes, I'm sorry. Thank you. I'm just like listing it out. You're absolutely correct. Yeah, revenue does increase equity. Revenue and common stock both increase. Thank you. Didn't even notice I'd done that. So yeah, be able to analyze transactions and tell me what two are being affected, what they are, and if they're increasing or decreasing. So you'll have some of that on the test. I won't try to throw anything tricky at you, but just, you know, review those ones like purchasing supplies for cash or on account, you know, paying dividends, paying rent, earning revenue, just kind of go over those basic transactions. Sometimes it might be a multiple choice question, and sometimes it may be more like a drop down. It won't be fill in the blank on those, you'll have options, but just kind of understand that. That's a big part of chapter 1, is just knowing the accounting equation and what affects it. And then the last big part are the financial statements. I need my other board. So if you remember, we prepared 3 basic, really 4, but we're not going to get into the statement of cash flows. So we prepared 3 basic financial statements when we're finished with the period. So it could be the end of the month, the end of the quarter, the end of the year. We'll pretend it's a month. So we've done a month's worth of transactions. We've figured out how they're affecting the accounting equation. And now we're ready to prepare our financial statements. Which is the first statement I prepared? Perfect. You guys are on it. So the income statement happens first. And what goes on the income statement? What 2 accounts or 2 types of accounts?
Start with equities.
Equity will go on your balance sheet.
Revenues.
Revenue. So technically, I mean, you know, revenues is an equity account. But yeah, specifically revenues and expenses. Okay. So really the whole purpose of an income statement is you're going to list your revenues and then you're going to list all of your expenses. So let's just make up some numbers here. say you have, you know, a few different over here. Okay. I didn't list out the expenses, but, you know, it could be wages, supplies, rent, that sort of thing. What is revenues minus expenses equal?
Net income.
Net income, perfect. So this is a very basic income statement. You know, it's not very pretty. But you know, be able to kind of fill in, you know, you won't have the blank sheet like you did on your homework, but on the test you'll have more, like they'll give you some of the structure and you'll do the drop downs to kind of fill it in. So no, you know, like we did, I think we did that on, no, we did the blank statement on the practice. So revenues, we list that, we add up our expenses. Revenues minus expenses equal net income. Can this be a negative?
Yes,
Yes, good. And what would that be called then?
that loss.
A net loss. Okay. So if our expenses are greater than our revenues, that can result in a negative, which would be a net loss. Okay.
Sorry, how'd you get that income again?
Revenues minus total expenses. So just subtract here. Yeah. Okay, so net income is always revenues minus total expenses, and that's all that your income statement reports. So just those two types of accounts. Most of the time we've only had one revenue account, but we'll have more than one expense account. You can have more than one revenue account. We're trying to baby step it, right? So. What's the second statement we prepare?
Retained earnings.
Retained earnings statement. Okay. Retained earnings statement, we always start with the beginning retained earnings. So in this case, if it was the beginning of the month, we're in January, we would say, like, I'm going to do RE for short, retained earnings, January 1st, and then, you know, whatever, if we have a beginning balance. If we're a brand new company, this would be zero. We have no, you know, no earnings that we've retained. But let's say we've been in business for a couple months, so we have 5,000 in beginning retained earnings. What do I add into this? Anyone remember? What gets added into retained earnings?
Your fees.
Yeah, this, right? Really just your net income specifically. But yeah, revenues and expenses. So I'm going to add net income. 6,000. What reduces retained earnings?
Dividends.
Dividends. Very good. So I subtract out dividends. That's, I'll just say we have 2,000 in dividends. So net income minus dividends is 4,000. That is our change in retained earnings. Okay, so when that's a positive number, I'm adding to or increasing my retained earnings. So net income minus dividends gives me a change in retained earnings of 4,000. I take beginning plus that change to get my ending retained earnings. So that would be retained earnings as of today, January 31st. That worked out nicely. Is now $9,000. Okay. So we take beginning retained earnings, we calculate our change in retained earnings, which is net income minus dividends, which gives us 4,000. We add that to beginning to get our ending. Retained earnings is just the profit that you're keeping in the business. So it really is, for the current year, it's revenues minus expenses minus dividends. That's our current year's retained earnings. And then we add it to, you know, it keeps going. So we add it to the whatever's in retained earnings to get our total retained earnings. So again, if you kind of want to look at it over here under equity, all of these accounts roll into retained earnings. So retained earnings is an equity account. Okay. So again, understand what's on each statement, what accounts are on those statements, and then be able to do a statement, which again, you will get the drop down, the guided, so you won't have to type it all up yourself for time's sake on the test. What's our last financial statement?
Balance sheet.
Balance sheet, very good. Kind of ran out of room, all right over here, no room. What is the balance sheet report? Anyone remember? Everything, pretty much, right? What is it proving? What's the goal of the balance sheet?
Your assets, liabilities, stockholders, equity, all equal.
Very good. We want to show that our assets equal liabilities plus stockholders' equity. Okay, that's the whole purpose. And if you remember the difference, I didn't put the dates like the headers to save space, but on our income statement and our retained earnings statement, we put like for the month ended January 31st. On our balance sheet, we would just put the current day. We would always have company name at the top of any statement. Okay, so the balance sheet reports as of today, these are our assets and they equal liabilities plus stockholders' equity. So you truly just list all of your assets, cash, accounts receivable, supplies. We'll just list those three to save time. And then you would add them up. So see if I can do this where we add up. You never know. So total assets, 12,000. So we just add up our assets. And then in the second half, we do our liabilities and stockholders' equity. So I list my liability. In this case, it would just be accounts payable. I'm going to say 1,000. And then we list stockholders' equity. Bless you. So under stockholders' equity, we would have common stock. And then instead of listing revenues, expenses, and dividends all separately, we would just put it all in as retained earnings that we calculated right here. Okay. So we see net income flows in to the statement of retained earnings. Retained earnings flows into the balance sheet. So we'll just assume we have 2,000 in common stock. And then we have our 9,000 in retained earnings. I didn't really leave myself enough room. That would be over here. Okay. So total stockholders' equity is 11,000. We take total stockholders' equity plus our liability to get the total liability and equity of 12,000. Total assets equal total liabilities and equity. So I know that got kind of small. Okay, so on your balance sheet, total assets, then liabilities, and under stockholders' equity, right now, all you're ever going to see is common stock and retained earnings. Okay. So this retained earnings is from our statement of retained earnings, or we would calculate it. Like on the homework, you have to take beginning retained earnings, add in revenue, subtract out expenses, subtract out dividends to calculate that retained earnings. So again, know how to do like some simple little statements, and just also kind of review, which if you know how to do them, you'll review it, what goes on what statement. So on your income statement, revenues and expenses, statement of retained earnings, net income, dividends. And then your balance sheet is really all of your accounts, right? We just, instead of saying revenues, expenses, dividends, we roll it all into retained earnings. So the only accounts that don't show up on your balance sheet are revenues, expenses, and dividends. Any questions on those? Okay, good. So I went over that. As far as hands-on stuff, we did some of this in the chapter 1 practice, and then you did it on the homework. If you get, assets equal liabilities plus equity, and you're given two numbers, be able to solve for the third. That one's pretty easy, right? You guys are all good at that. And then also, kind of talked about it when we were talking about the accounting equation. Just be able to tell me if I say cash, that cash is an asset. So you might be given a list of accounts and just, being able to identify, is it an asset, a liability, an equity, or even further, revenue, expense, stock, dividend. So to be able to identify that, okay. See, make sure. I think the only other thing I have on there, I wrote down profit. Your net income is your profit in your business. So if you see the word profit, that's the same as net income. So profit is revenues minus expenses. Any questions at all over chapter 1 or the test or anything? You guys feeling pretty good about it? Good. It's not too bad, I promise. I don't try to trick anyone on the first test. I wait. No, I'll give it a month or two now. It's never my intention to trick. Sometimes it happens, but it's never my intention. Good intentions, right? But I did these pretty similar tests last semester. Last semester was the first semester we were using Cengage. We were using Connect. So there was one question on the test that like everyone bombed. But I go back and look at that. So I'm not just like, ha ha, no. So I went back and I gave everyone credit for that question. I'm like, okay, it was the way it was worded, it was tricky. It was different than what we had covered in class. And so I understood why they're like, I didn't even understand what I was asking. So I do look at that. So that's been removed from the tests you guys will take. So, but overall, they did pretty well last semester. So I think you guys will do good too. You guys are a good class. A lot of you have already done your homework, and that usually, I know it's due tonight, but So, so make sure you do your homework. If you haven't finished it up, get that in tonight. Remember, you can use that Check My Work as many times. If you can't get it from Check My Work, there's an email instructor option, or you can submit it and see feedback and then go back in and finish it. So you have some options there as far as getting your homework done. I need to post. April, our accounting tutor, is here. I don't think she's here right now, but she's on campus Monday, Tuesday, Wednesday. So I'm going to post on Canvas her hours, but she's right through that door when she's here, and all of you are welcome. It's a free service. So if you need extra help when she's here, you don't have to make an appointment. You can just go in and get help. And she's amazing. She's been through all the accounting classes. She's a student here, so she knows what it's like. You can always come to me, but if I'm like in a meeting or not in my office and she's here, great resource. Plus she has more time for hands, like one-on-one. She won't give you answers, but she'll help you get the answer. And then she knows, if you tell her I'm your professor, she usually knows my like teaching style and everything. So we talk, so she can help. Any questions? Okay, well, we're done early, so feel free to stay. You have about 30 minutes if you want to work on homework, but you're also welcome to leave. And have a great weekend and study, and I will see you Tuesday for the test.